Hello there, my name is Łukasz and I'm your GSI for Panos's FIA class. In this video, I would like to show you how to standardize financial data using FIA template. Here is how the template looks like. You can see all important items from the income statement and key aggregates from the balance sheet listed here. The standardization is important because it facilitates your valuation in multiple ways. First, it speeds up the process. You will see later that each company can make different presentation choices with respect to their financial statements. However, you will want to standardize it to be able to rely on the common layout for your valuation exercise. Second, standardization allows you to identify and focus on key value drivers, as listed here. Okay. So data standardization begins with financial statements. You can obtain financial statements from SEC Edgar. Here is the company search. I have already found the company of interest. Here is a 10K of Apple. Right? Now you can navigate to financial statements. This is item 8. And yeah, this is the income statement for Apple. And as you can see, this data is different than the one that we would like to use in our standardized template in terms of layout. So for example, our template will separately recognize depreciation amortization accrual, but Apple made the choice not to do it. So there will be differences, and that's why we are performing standardization to begin with. So further, I will refer to as reported figures. This will be with reference to this data that you can find in the 10K. So this I will refer to as reported data. And the data in my financial statements in the FIA template here, I will refer to standardized data. Okay, so the question is how to get from as reported to standardized data. So for this exercise, actually the most useful tool is FactSet due to hyperlinking, as you will see later. Okay, so here is my FactSet. This is a snapshot view of the company. And then you can go to the financials, on the left, income statement. And you can see here that you will have a toggle between standardized and as reported data. Okay, so as reported, standardized data will be the data that was standardized by FactSet analysts. So those choices might be different than the choices that you might want to make. You have a you can choose to display it as a full statements or as a shorter form. But in any way, different people, in any case, that different people will make different choices. So eventually you will have to exercise your own judgment how to standardize data, and your choices might be different than those made by FactSet analysts here or made by me in the example that we will follow. So for that reason, you always want to rely on as reported data here. This data can be directly reconciled with the 10K, and I encourage you to use FactSet simply because this is easier to download to Excel without making, typing error in copy pasting the data from 10K. But due to hyperlinking feature, you can easily click on the number and confirm that this number reconciles exactly with what you can find in the 10K. You will see that later as well. Okay. So let me now go to actual standardization. So going back to my template. I will use the income statement as a detailed example, but then I will proceed with the balance sheet. So let me focus on the income statement first. So step 1 in the standardization of income statement will be key items, which are sales and net income. You always have to make sure that sales and net profit reconcile with as reported data. For that reason, we will simply report them at their as reported values in the respective rows of the income statement. So, as I told you earlier, you can get the data directly from 10K, or I actually recommend that, download them from a data aggregator. I'm using a FactSet, and you will be most likely using FactSet as well. So I have it for convenience, I have it pre-downloaded here. This is as reported data, simply download it with FactSet, and I can take it here and copy paste sales and do the same with net income. So this is the data that I simply pre-downloaded using FactSet, and you can easily confirm. So let me take a look. Sales of 260 million. This is in thousands, so this is actually 260 billion, 260, and net income of 55 in 2019. Let me quickly go to FactSet to confirm. As reported, sales 260, net income 55. Correct. This reconciles, and this will also reconcile with the actual 10K. Okay. So this is step one. Let me go back to the template here. Okay. Now step two. Step two is cost of goods sold and depreciation amortization. So some companies, SEC actually gives, or standard setters in general, give the company the choice with respect to how to present the depreciation amortization accrual in the financial statements. So some companies will report it as a separate line item, but some companies will bundle it with other items. This is, for example, the case of the Apple. I showed you earlier that depreciation amortization is nowhere to be found in the income statement as reported in the 10K. So this doesn't, let me actually go to that. See, it's not here. However, the fact that depreciation amortization is not here doesn't mean that the Apple is not making any depreciation charges. What it means is that Apple is simply bundling this expense with some other line item. So our role is to unbundle it. So in most cases, depreciation amortization will be part of cost of goods sold. So in my standardization, I'm going to make an assumption that the company has included depreciation amortization as part of cost of goods sold. So I will want to break down cost of goods sold into depreciation amortization and other costs. Why? This is because depreciation amortization is different, and I will use it in my valuation exercise differently. Specifically, as Panos mentioned in the lecture, this accrual tends to be more persistent than other components of cost, and it will be forecasted differently. So to break down cost of goods sold into the two components, first I will need to obtain what the depreciation amortization is. So if it's not in the income statement, where can I find it? The answer is the cash flow statement. So let me go to FactSet cash flow statement. Again, using as reported, you will see that depreciation amortization line item is available here in the statement of cash flow. The company is required to report depreciation amortization in their statement of cash flows, and also the disclosure might be presented somewhere else, but it needs to be somewhere in the 10K, so we will always be able to access this figure. I'm using the number from statement of cash flows. Going back to our template, again, I have pre-downloaded the data I need. So this is a depreciation amortization, copy, paste. So I'm using it as reported values, but as reported values come from statement of cash flows. So now, of course, we cannot report the cost of goods sold at their as reported values. Why? Because we would double count the part of depreciation amortization that was included in cost of goods sold to begin with. So what I'll do is I will use as reported data. Again, this is as reported data, so it includes depreciation amortization. And I will subtract the depreciation amortization that I recognized in a different line item. Here. Now you can see that, in 2019, 151 plus 11 is like 160, right? This 160, again, income statement 160, 161 actually will be the cost of sales that are reported in the 10K. So again, it reconciles. However, what I achieved is that I managed to break it down into two components. Okay. That would be step 2. Let me now proceed to step 3. Step 3 is SG&A and R&D. So SG&A and R&D procedure is very similar to cost of goods sold and depreciation amortization, in a sense that some companies will bundle R&D items with SG&A, but some will report it separately. So now, in the case of Apple, you will see that Apple does report it separately. So it's the opposite case than in the case of depreciation amortization. So conveniently, Apple provides the R&D expense as a separate line item, which makes it easier for us, because what we can do is we can simply go and report R&D expense at the as reported levels. Because we were not adjusting SG&A at this point, we can also report SG&A at the as reported values. Okay, so this would be step 3, SG&A and R&D. So let me now proceed to the next step. Actually, let's now calculate margins. So margins will be simply sales minus the corresponding cost levels. Okay, I have this margin. This is gross profit margin. Gross profit margin minus R&D minus SG&A will be the next level. Okay, and then EBIT will be EBITDA minus depreciation amortization. So you can see that EBITDA would, for example, not be available in the Apple's as reported income statement, but it's easily available here in our financial statement. Oh, actually now you can see that I messed up things a little bit, because I should be defining them as sums rather than differences, because costs are already negative. So let me simply correct. This is a warning sign. Of course, you really have to make sure that your margins are calculated correctly, otherwise the net income will never reconcile. But in the end of the video, I will summarize few sanity checks that can help you ensure that you are performing the standardization correctly. Okay, now I fixed it. I have margins. So we can now proceed to the next step. The next item is interest expense and other income. So interest expense will be reported in the financial statement somewhere, but in the actual statement, it might be bundled with some other items again. So this will be the case with Apple's financial statement. So as you can see, there is this item called other income expense net. So we suspect that interest expense will be part of this item. Why? Because it's nowhere to be found elsewhere. However, we also suspect that apart from interest expense, this line item will also include some other stuff. So now our task is to dissect this line item a little bit. So the best way to do it is to actually utilize the so-called Ctrl+F method. You can see I'm typing other income and searching for other income. So financial statements, the 10K is not just, income statement and the balance sheet, but this is a lot of accompanying disclosure that might guide you in your standardization exercise. So let me search for other income disclosure. Okay, here. Here you can see that the company reports the detail of what it reports as a part of other income expense. So, fortunately, interest expense is a big and actually separate component that goes into the other income. This is very convenient because now we can simply use other interest expense part in our standardized template. Okay, so let me go back to my template. Again, just for convenience, I have it pre-downloaded from FactSet rather than copy pasting from the income statement. But again, all of that data can be easily reconciled with the 10K. So I'll report interest expense here. Okay, good. Now, before we actually leave the disclosure about other income, we need to exercise some discretion and decide how we want to classify any of the remaining, all of the remaining items from the other income category. So actually the choice is between other operating income or extraordinary and discontinued operations. So you can either put it here or here. So, I mean, extraordinary items and discontinued operations are, extraordinary. So, whereas in the Apple case, the missing component, the other component is interest and dividend income, which comes in Apple's case from investment in bonds primarily. So I don't see a reason to report it as an extraordinary item or a discontinued operations. So I will set to 0, and then I'll try to report the other components as other income. However, there is more to other income than just, interest and dividend income here, because what makes the standardization exercise challenging is the fact that this particular line item is not the only place where you can find potential candidates for standardization. There will be a lot of accompanying disclosure, and you might want to reclassify some items as other income because they will be bundled with other items where they shouldn't. So to make my life easier and to guide your choice making, I will show you how to outsource part of the work to FactSet analysts. So let me go to FactSet. And the trick is now to switch from as reported to standardized data in FactSet. So now you can not only use FactSet, let's call it pre-standardized data, which is the standardization that uses different choices than you might want to make. But actually the usefulness comes from the fact that you can use hyperlinking to trace down every choice of FactSet analysts. So let me show you what I mean by this. Here, let me go maybe for full statement. Here you will have after operating income, you will have other income expense, right? Item. And those are all the items that are not easily reconciled with 10K. But again, you have this amazing feature called hyperlinking, and you can click it, right? And after you click it, you will see all the items, all the small choices that the company, that the FactSet analysts have made to standardize the financial statements for the use of their framework. So now you can be clicking them and see where they come from, because again, at some point they will all be linked to the 10K, right? So for example, you will see that this 7 million will be some kind of item that is coming from reclassification between other comprehensive income and the income statement income. So some of them, of course, will be major, and such as interest and dividend income, and some will be minor. So very important thing to note is that you do not have to be super careful with items that are below the materiality threshold, because items like this one, for example, is unlikely to significantly affect your ultimate valuation. However, you can use that list and those choices made by FactSet analysts to guide your own choices. So how you want to proceed is to go back to your template and make sure there are no other items that you would like to, for example, include as extraordinary or discontinued operations. If you consider any of those items really extraordinary, or if you realize that some of it comes from discontinued operations, then you might classify them here. However, I'll keep them at 0. And to, speed things up a little bit, I will use other income at the values reported by FactSet. So this is FactSet standardization. So this is not as reported data. It can be reconciled with as reported data, as I showed you, using hyperlinking. But I am making this a leap of faith in a sense that I'm relying on their work to facilitate my own standardization. However, again, we encourage you to be critical in making this exercise. So you really want to go through the list of FactSet and really make sure that you agree with all the statements and there is nothing else that you should be classifying elsewhere, or you also have to be careful not to double count something you included in other line items. Of course, you can again use a famous Control F method, and going back to the statements, you can here search for whatever. If you find some item in the reconciled, in the FactSet standardization that you want to learn more about, then you can also search for it in the 10K. But okay, I made a choice to rely on the work on FactSet Analyst, and I'll proceed with that and see where it gets me. So let me now continue to the next step. Next step will be taxes. Actually, first thing is that you can calculate another level of margins. Again, as you can see now, EBT will be higher than EBIT, and this is because of the other income, which is primarily, interest income, but there are some other components to that, and this is actually more than offsets the interest expense. So this is higher than EBIT as it should. Okay, and now taxes. So taxes are really easy. You will have a provision for taxes. Let me go back here. Item 8. See, you will have a provision for income taxes in every 10K. So there is not much choice here. You will also have additional disclosure in case you wanted to learn more where is that coming from. But for the standardization exercise, I will simply use as reported data, and as reported taxes are here. Okay, I'll put it here. Easy. This is from FactSet, but it can be easily reconciled with the 10K because it comes at the as reported values. Before we go to the other adjustments, let me also take a look at minority interest and preferred stock here, those two items. So remember that we are taking perspective of a common equity holder in the valuation. So you have to separately recognize minority interest, which is the portion of net income that is not attributable to common shareholders. So this results from the accounting treatment of consolidated items. There will be simply portion of net income which will not be attributable to common shareholders. So if we want to take a perspective of common shareholders, we will have to be subtracting minority interest. Those are usually reported. They have to be reported in the 10K. So they are not here, and this is because Apple simply does not have, minority interest coming from the consolidation. So simply in the case of this company, this is 0, but it might not be the case for other companies. So you have to be careful here. If there is a minority interest, it will be in the income statement. So you don't have to worry that it will be bundled with another item. Similarly, let me take a look at dividends on preferred stock. You can easily confirm with 10K that Apple is not paying a preferred dividend. It's paying a common dividend. It recently started to pay common dividend, but here is only preferred dividend because common dividend will be paid out of net income. So this will happen later, as you can see here. So make sure you only include preferred dividend here, and preferred dividend in the case of Apple again is 0, but it might be different for other companies. Okay, so what's left is this other adjustment line item, and this will be our next step. So this other adjustment line item is very different than other income or the extraordinary items, in the sense that this is a reconciling item. So this is a residual category that will help you reconcile the as reported data with some of the minor standardization choices that you've made before. So to make everything work, I will define that other adjustment as a difference between what I should be having and the items that I already recognized elsewhere. So let me show you. I'll start with earnings before taxes. The taxes are already here. Okay, here are the other items. So extraordinary and discontinued operations, minority interest, and dividend in preferred stock. That would be all. And ideally, I should be now arriving at net income. So the adjustment will be the difference between the net income that I will arrive at minus the net income that I have already reported because I got it from the financial statements. So anything that reconciles it will be all of that minus the net income. Can you see that? This first bracketed term will be net income that would be implied by my standardization choices, and this is a net income at the as reported value. So let me now drag it. Okay, so ideally this should be 0. In this case, this is not 0 because because I did not include some items where I should be including them. So this is not 0 in this case. However, I've learned before from the reading the financial statements when I was making my choices for other income is that this number, wait, let me actually show you. So if I go to FactSet, as reported data, as reported will be 260. However, this number is a little bit different than the net sales reported by, for example, FactSet analyst. And the difference here, you will see, is only the total net sales, which is the other item. Let me show you. See, 206, 214. Those are reclassification adjustment out of accumulated other comprehensive item. So this is again a reclassification correction. And actually, because it was reclassified back and forth between net sales items, instead of actually reporting here, I could have made a choice, and actually frequently I do that. Rather than reporting it here, I would report it as part of net sales. So if you wanted to start not with net sales in the Apple financial statement, but net sales as reported in the FactSet, the difference would be that, and you would have arrived at other adjustment of 0. But for now, I mean, as long as I know where this difference is coming from, then it's fine. But again, ideally, you would like to have it very small, negligible, preferably 0. So one note here, the dividends, they are all they are here, this is they are paid from net income, so they do not constitute a cost, so you will not find it anywhere here. Actually, yes. So this will be the complete financial statement. What I'm missing is actually some margins. So let me now calculate this one quickly for you. So this is net income before extra ordinary items. Okay. Actually, okay. So I can change the sign, right? This should be a correction to the minus. So this, the actual sales figure, if corrected for the OCI adjustment, would be smaller. This is this 259 instead of 260. So I simply reversed the sign. So now it makes sense because net income before extraordinary items is equal to net income available to common shareholders. So actually, before we go to balance sheet, let me simply summarize for you 3 sanity checks that I would like you to keep in mind. So first, check again if your sales and net income figures reconcile with as reported data in 10K. So here and here. Of course, in some instances, such as in the case of Apple, I might make adjustments even to net sales item, but I don't here in this example, I don't do that, so this will reconcile exactly with the 10K. Second, check also if all your margins are correctly calculated. So actually reversing a sign might be a common mistake, or sometimes skipping something. Really make sure you do it correctly. And the third sanity check is please make sure if other adjustment and extraordinary items adjustments are reasonably small. So if it's big, and in this case it's quite big, you would need to put more effort into trying to see what's there and try to allocate it in some other line item so that this is closer to zero, if not zero. Okay. So before we go to the balance sheet, just one more thing. Okay, so first let me add those dividends for completeness. So I added dividends here. This is not part of the income statement per se, but this is just to illustrate the point that dividends do not constitute a cost. Instead, they are paid from a net income, so they will be reported elsewhere. So I added it here. But second, I also wanted to show you here I have financial statements where the sales are corrected for the items that have been reclassified from the OCI. So this is a lower figure that is corrected for that reclassification. I found the exact details on this reclassification in the 10K, so I could make this adjustment. And the reason I'm showing you this is that once you make that adjustment, the other adjustments will necessarily go to zero. And this is actually the standardization that I'm a little bit more comfortable with, in a sense that I direct these other adjustments to where I think they should be, because if they relate to net sales, then I corrected the net sales income. So this is a little bit different from just using as reported data, but I think it's a reasonable choice to make, and for that reason I just decided to make it. So okay, so let me now go to the balance sheet. I'll use balance sheet as an opportunity to summarize overall standardization strategy. So I will not go as much into detail as in the case of the income statement, but I will simply quickly summarize things for you. So the first step, again, is copying known items at their as reported values. So for income statement, this was sales and net income, but for balance sheet, this will be total assets, total equity or its components, and liabilities, total liabilities. So you can see total assets, they have been just, the values have been inserted at their as reported values. So this really needs to reconcile. So I'm just getting it directly from 10K, or again, using and data aggregation software. My numbers come from FactSet. And after that, once you establish the key items that really have to reconcile, then you can proceed item by item and begin with those that you can again easily find information about in the financial statements. So for income statement, those were, for example, R&D expense or provision for income taxes. If you remember, we got it directly from the 10K, and most of the incomes in balance sheet will follow that procedure. In fact, standardizing balance sheet is easier than standardizing income statement, in my opinion. So for example, operating cash and marketable securities, let me quickly show you. Here's the income statement. Here is the balance sheet, right? In the balance sheet, you can see cash and cash equivalents and marketable securities. And you can simply, they are disaggregated, but you can easily add them up and report as operating cash and marketable securities item here. Similarly, receivables, they will be reported in the 10K inventories. And all of those items, also, you know, the total liabilities and shareholders' equity components. So usually total equity will be simply a sum of paid-in capital and retained earnings. Those will be available in the 10K, so you can easily copy-paste them. So that would be the second step. Finally, the final step, as it was in the case of the income statement, you will define some reconciling items. So those items you will define per differences, in a sense that those will be differences between major totals and already recognized items. So recall what we did with other adjustments here, right? Remember, the other adjustments was a difference between the net income that I would have arrived using my figures that I recognized other items relative to the net income that I put there as a starting point from the as reported data, right? Similarly, you know, the example for the balance sheet would be, I don't know, current assets. See, you can see that the current assets is defined as a difference between, you know, total assets and all the assets that I recognized before, right? And other assets will be the difference between total assets and current assets, PP&E, investments, and intangibles, which are easily reconciled with 10K. So remember to define all those other categories as differences. Make sure you do not double count, and you'll be fine, and everything will ultimately reconcile with as reported data. Okay, so now our standardization exercise is complete. I have successfully standardized income statement and balance sheet to match my template, and now the model will take care of everything else, including a statement of cash flows, which by the virtue of the articulation of financial statements will be generated automatically for you here in the cash flow analysis. So that's really all. In summary, standardization is challenging but very important valuation step, which in the long term will help you use your time very efficiently. And also, I would like to assure you that the learning curve is extremely steep, in a sense that you will get at this better very quickly. So although your first standardization will probably take some time, you will later gain a lot of experience very fast. So one final note, please remember that standardization requires judgment and different people will make different choices. But what is really important is to avoid missing key items or double counting. And to avoid this, please start from the major items and use them at their as reported values, and then define any reconciling this other type of items per differences. This will help you ensure that you do not omit anything or double count. And also make sure that those reconciling items are reasonably small. So thank you for watching this video, and as always, feel free to reach us if you had any questions. Bye bye.